Good morning, everyone. Welcome to our training this morning on ACA reporting changes and requirements. I'm Ken Spencer. I'm the President and CEO for HR Service. So happy you can join us today. Just a couple of things to get started. We have everyone muted. If you have questions, please feel free to send over your questions via the system. I'd like to introduce our speaker today, Holly Young. Holly Young has been with HR Service for several years. She is our ACA expert. She has over 20 years human resource management and employment law experience. She's SBHR certified, also has a master's degree in leadership. Holly, I'm going to turn it over to you.
Okay, thank you, Ken. Good morning, everyone. Here we are again. It's about to be ACA time, reporting time, and I'm sure we're all excited about that. Before I get started into the presentation, I just want to mention that I am not a lawyer or a CPA. And so the information that I'm providing to you today should not be construed as legal or tax advice. And if you have those kind of questions, I recommend that you talk to your attorney or tax consultant. So today we're going to look at a few different things. I'm going to briefly go over who has to file. That really hasn't changed in the past couple years. We're going to talk about the 2018 due dates. That's important. The changes to ACA reporting, a few things, considerations based on some things that have been going on with the IRS, trying to vet out certain questions that have come our way, changes to the forms. I want to talk a little bit about affordability, and then also penalties and late considerations, and finally reporting solutions. So I want to go over who has to file, and as I mentioned, that hasn't changed. There's actually two parts to this. So the first part is applicable large employers must file, and we refer to those as ALEs. And those are employers with 50 or more employees, or aggregated employers, so control groups with a total of 50 or more employees. And I just want to jump down to the little asterisk note at the bottom. This is directly taken from the IRS. If an employer has at least 50 full-time employees, including full-time equivalent employees, so that would be your variable hour employees during the year. So on average during the year, so there's a formula, and we do have a tool for that if anybody is interested. You can let us know by emailing us, and we'll be happy to provide that to you. But so it's the prior year that determines that they're an ALE for the current calendar year, and therefore subject to the employer shared responsibility provisions and the reporting provisions. So if you had clients last year or this year that haven't met that 50 mark, then you're in good shape, unless, of course, and I'm going to jump back up to the if they're self-funded or level funded. So those employers must report regardless of size. And if they have less than the 50 employees, they use the B forms. And the B forms are much simpler forms, and not as much information is required. There's no coding, as I will get into a little bit later here. And however, if the large employers are self-funded or level funded, then they have an additional section or part 3 on the 1095C to complete. So here's what we know so far with the 2018 reporting. We still have to comply with all the ACA requirements. Even though an executive order was signed back in January, it did not relieve any penalties or any reporting responsibilities. We also know that the good faith penalty relief, which we've had for the past 2 years, no longer applies. At least we haven't heard from the IRS that they're going to extend that again. So what that did for us the last couple years, if we had mistakes maybe with the premium amounts in line 15, or maybe we didn't do the right code, those weren't counted against us, and we don't know if that's going to be the same. So we need to be aware of that and make sure we have our data as accurate as possible. The due dates have not been extended. So when we originally started all this a couple of years ago, the due date was going to be January 31. It matched the W-2 distribution. So postmarked or distributed to the employees, which would be the 1095 forms, B or C. And so those were extended. So back 2 years ago, I personally think the IRS extended it because they didn't have their processes in order, but that was actually extended by a couple of months. Last year, it was extended to March 2nd. This year, it is due January 31st. We haven't heard differently, so that's what we're going with. However, the other two deadlines are going to remain the same. So IRS submittal need to be postmarked by February 28th if you're submitting those by mail. And the e-filing is due to the IRS. Normally that's March 31st. That falls on a weekend, so that's actually been extended to April 2nd. If you have a company with 250 more forms going out, e-filing is required. Now, I just want you to keep in mind as I go through this that employers may file for a 30-day extension, and the form that they would use is 8809. And I'll talk a little bit about why you may want to consider that here in a moment. So some of the changes to the reporting, first of all, the IRS instructions, just some minor details have changed, nothing significant. The affordability percentage has changed. It's gone up from 9.66% to 9.69% for 2017, but in 2018, it's actually going to go down. So it's 9.56%. As a consequence, the federal poverty level has changed, not only because the affordability percentage has changed, but because federal poverty levels just change from year to year. So for mainland affordability for 2017, that would be 11,880 multiplied by the affordability percentage, which is $95.93. And what this means is if the employer offered cover, the minimum essential coverage, minimum value coverage, and the premium cost for employee-only coverage that they could have chosen from, not that they may have taken, but that they could have chosen from, if it's less than $95.93 a month, then that employer may be eligible to use the federal poverty level affordability, which also affords employers a little less reporting data to put on the forms. There was also lots of things going on last year, and companies had questions about flex credits and opt-out payments and wellness programs. And there was a notice that came out from the IRS in about last summer, 2016, and many of these proposals weren't going to be effective until January 1/17. So that's why I'm bringing these up now. So flex credits generally reduce the cost of coverage, so that premium amount, unless those credits can be used to purchase non-health coverage, or can be cashed out or contributed to an HSA. So, so just keep that in mind, and that is effective for any plan year, for any plan year that started after 1/1/17. So if the plan year began before that, you don't need to worry about it for now. However, opt-out payments generally increase the reported cost of coverage unless it's conditional on providing other coverage, or if it's part of a collective bargaining agreement that was entered into before December 16th, 2015, or some kind of arrangement, unconditional arrangement began before that same date. So let me give you an example of that. So, the company offers coverage, but if the employee waives coverage, they're going to give a $400, cash payout to that employee instead of because they're not taking the coverage. Now, if that person did not take the coverage because they're on their spouse's coverage, then they don't have to worry about any fluctuation with the premium. However, if the employee took that $400 and didn't have any other coverage options from a spouse or parent or whatever that looked like, then that $400 actually gets added on to whatever that employee-only premium is. So the wellness program, if there's discounted contributions, say for biometric tests, it lowers the premium by $10. Those don't get counted. The premium is the premium, regardless of maybe those little contributions for being part of the wellness program. The exception to that is a program designed to prevent tobacco use. And if that's the case, then you treat the employees, or the premium for the employees, you report it as the non-tobacco premium. Really changes to the forms, there's not many. The 1094C form, and we're going to look at some pictures of those here in a minute, but there's no transition reliefs. Those are all gone away. And so on line 22, box B and C are gone. They're reserved right now, and they haven't said what those are going to be used for in the future. They're just basically grayed out. And because of that, there's no need for column E in part 3, so that's gone away as well. The 1095C form really hasn't changed at all. Once again, this year, supposedly we were supposed to start reporting the plan year month date. They've actually said, nope, you don't need to do that yet. So, but it's going to be mandatory for next year. So I guess we'll just wait and see if that's the case. There are no changes at all to the 1094B or the 1095B forms. So here is the 1095C forms. So this is what goes to the employee. When it gets sent to the employee, you also want to make sure that you include the instruction sheet, and then copies of it get sent to the IRS. And for the copies, you just need the first page, unless you've got several dependents, and then you may need some additional pages, but usually it's the first page. And so just kind of to go over this real briefly, part 1, you've got the employee information, and then you've got the employer information. Part 2 is the coding. So line 14 is called the 1 series codes, and that's about what was offered, or was anything offered. So typically you see like 1H would be a non-offering. The codes that I see most of the time are 1E or 1A, which means 1A is a federal poverty level offering. And then 1E is it's offered to minimum essential coverage, minimum value is offered to the employee and the dependents and the spouse. So those are the two I usually see. Line 15 would be the premium amount, and that's, again, what they could have chosen for the lowest employee-only employee cost premium. And then line 16 is what did that employee do with that offer, or why didn't they take that offer, or why wasn't there an offer given? So this is where you would record the 2 series codes, and those would be maybe if they're not an employee, or maybe they're in their waiting period. So that's what those codes would be. And then part 3 is if for companies that have level funding or self-funding, and then you would list everyone who has coverage and then the months that they have coverage. The 1094C form is the transmittal form to the IRS. So I like to think of it as a cover sheet. And so part one is you're just filling in things about the employer. You're going to put how many forms are underneath that cover sheet, basically, that's getting submitted. They do want to know if this is the authoritative transmittal. And what that means is if you've got different forms coming from maybe different locations, say there's 6 locations. 5 of those locations would just be submitting their forms, but the final one would need to be the authoritative transmittal, and then would need to answer part 2 for all 6 of the companies that they were sending in for. 21 is if they're part of an aggregated group, and if they are, they have to list all the EINs that are and names for that group. And line 22, we've got a qualifying offer method. That would be your federal poverty level. So if you're using a 1A, and that's not just because you've offered the coverage is affordable and less than the 963, but it's also that you've offered it to spouses and dependents, and it has to be at least 95%. And D here is the 98% offer method, and you're just saying we've offered the minimum value MEC health coverage to our employees and their dependents, and 98% of them. And then there's a little bit of relief when you check those boxes. And one of those reliefs for the 98% is you don't have to fill out column B here on part 3. Column A, you don't have to fill, or if you hit the qualifying offer here, the box A means you don't have to fill out line 15 on the 1095C form. So this just asks a few more questions about the coverage, and that's the 2 forms for the ALE groups. I want to go a little bit about affordability. So affordability codes, they're safe harbor codes, and the IRS has said that they're optional to use. They're typically used in line 16. And if the employer does decide to use these safe harbors, they have to be consistent for any category of employee, so a reasonable category. So that could be maybe you use rate of pay safe harbor for hourly, but you use W-2 safe harbor for your salaried folks. But I want to point this out here. The safe harbor codes cannot be entered for any month that the employer did not offer minimum essential coverage to at least 95% of its full-time employees and their dependents. So really quick, line 16, an offer is made. You'll want, if the employee took the coverage, it's 2C, and you don't need to worry about affordability. If they waived the coverage, and I also recommend, just kind of offshoot, if an employee does waive coverage, make sure you get that in writing and save that with your documents. But if they waive coverage, you can use 2F, 2G, or 2H in line 16. So 2F would be the premium cost was affordable based on the earnings on the W-2 box 1. 2G would be if it was affordable under the federal poverty level, and 2H, it would be affordable by the rate of pay. And I have a little calculation here. I do want to point this out. Rate of pay, the IRS has provided what this calculation looks like. So this isn't rate of pay times if they're a full-time employee and in a month they work 160 hours. The IRS only allows you to use 130 hours. So keep that in mind because it does affect that premium. And then this year you multiply that by 9.69%. You can opt for your salary, folks. You just use the monthly. If there's increases during the year, you have to use the lowest rate of pay during the year. Why I wanted to bring this up is because of the 2F affordability code. So the one with the W-2 box 1. So you may want to go back and check with payroll companies, whoever does your books and prepares the W-2s for employees, to see when they will have that data. I've worked in payroll before, and I know sometimes some of the bigger companies sort of keeps that data as you go along, and a lot of times that data will be known the very first week of January, because it's been keeping track of it all year. But timing may be an issue. And if that's what what the company wants to use, the W-2 information has their affordability code, they may want to consider filling out that 8809 form and asking for that 30-day extension now, as opposed to waiting and scrambling at the end. If you wait and you submit it, it does have to be submitted before January 31st, but the later you submit it, you may not know if it's been approved or not. So that's why I want to just make a note of that. I just want to say, people really haven't heard much about penalties yet from the IRS. However, just last week, the IRS updated its online employee mandate guidance and put a letter out there called the Letter 226J. And I have a link there, and we do have a handout that you can access within the slideshow. And so A and B penalties still apply. And so your A penalties is if you're a company that wasn't doing the appropriate health coverage offerings, and one of your employees went to the marketplace and received a tax premium, the IRS will now come back and they will take all your full-time employees minus 30 and assess a penalty on all of them. Now, B penalties are a little bit better, and that means you did do the right health coverage. It meant MEC, and it meant MV, which is minimum essential coverage, and minimum value, but it may not have been affordable. And if that's the case, and one employee went to the marketplace and received a tax premium, the IRS can now come back and penalize you, but would only penalize you for those who went to the marketplace. So it would only be the full-time employees that were affected. So just want to bring that out because that was recent, and if you get one of those notices, you have 30 days to contest the IRS findings. So make sure that if you get that you do respond. Really quick, for late filings, or if you haven't filed yet, you might want to think about that. Penalty for filing a correct information return is $260 for each return. Failure to provide the employee with a statement is $260. They do have caps, which is nice. However, there are special rules if there is intentional disregard to the requirements. So essentially, if you don't file your forms for 2015 and 2016, that could mean a $520 per form penalty, and maybe even more because there's no cap. I'm going to go ahead and turn the time back to Ken. If you have any questions, hopefully you've been sending those to us via chat, and I'll be happy to address those here in just a moment.
Great, thank you, Holly. We have had a couple of questions come over, so let's go ahead and address those questions. The first question is reporting required for part-time and non-eligible employees?
No. So if they were truly part-time, they never became eligible for health coverage during the calendar year, and that could have been based on whatever measurement period you've put in place, they do not need a form.
Great, thank you. There's another question asked if we can get copies of the PowerPoint presentation. We will send out copies of the presentation, as well as this is being recorded, and we'll provide a recording of the full presentation. So if you have others who missed it today, we're of course doing this again on the 21st at 1 p.m. Mountain Time. So if anyone wants to join us then again, or referring someone else to that meeting, but we are recording this and we'll send that around. There also is a question about, well, there's a comment, and this is from attorney Lisa Klinger, who is on as well, and she's giving us a minor correction, Holly.
Okay.
The federal poverty level for 2017 is actually 12,060, not the 11,880. That adjusts it for the 2017 figure.
And Lisa, I actually have seen different versions of that. So the one that I posted was on the SHRM website. So I've seen both. And so I'm just going to say, so there's a lot of different information out there.
Okay, they're pretty
that.
close. I mean, both figures are within a small amount, but we'll have that finalized if anyone has further questions on that. And do feel free to send over other questions if you have them. So I'm going to, one of the things is you're looking at your options. We have both brokers on today as well as employers. And as you're looking at your options, as how do I get this done? As Holly mentioned, it's here. You have to start getting things ready now. You can't wait until the last minute. They've not extended the deadline. And of course, a lot of folks you can certainly approach their payroll providers and see if they're getting some help there. Of course, though, you could also do it on their own. And if you're comfortable wading through the codes and completing the forms and documents, that's a great option for you as well. And then, of course, there are providers. HR Service does offer a full service reporting assistance as well. So with our service, we actually take out all the pain and difficulty. We'll complete the forms for you. We'll gather in the information. We'll complete the 1095s and the 1094s. We'll deliver the completed 1095s to the employer to disperse out to their employees, and it will submit in the 1094 with copies of that to the IRS as part of the base program. Optionally, we do have options where we can do the e-file submittal, and we can also mail the forms and everything into for the participants. Some of the pricing, just to kind of give you a little bit of a feel for our service, and we find that we're very competitive with the options that are out there. If you have a self-funded plan and you have less than 50 employees, it could be as low as $350. As Holly mentioned, those are easier forms to fill out and complete. And then the pricing from there then is based on the number of participants. So it could be as low as $1,600 if you have if you're at the lower end of the 50 range. Higher groups could be a couple $1,000s. And then the pricing can vary a little bit based on the number of EINs. If you have banded premiums based on if you have multiple groups or classes, so some of those things can impact it. And then of course, if you want us to do the mailing or the e-file. And what we're going to do is we'll actually send you out rates and options. For those of you who are interested in considering having us help you with the service, I would recommend that you get it pinned down soon. We're filling up fast, and the only thing we need from you is a simple agreement, and then we're asking for half down. So I'll be sending that information out to you. For the brokers who are on today, we will provide you with a one-page simple handout to help communicate the service to those who need this help, along with the rates and the agreement. And so I will be sending all of that information out shortly. With that, just for those of you who have questions, or if you do need assistance, you can reach us at 855-447-3375 extension 1, or an email you could send into is solutions@hrserviceinc.com. And if you wanted to email Holly directly with a question, her email is holly@hrserviceinc.com. Looks like we do have another question that came in. Let me just come back to that real quick here. With regards to who has to file, what about M1 corporations? Are they required to file regardless of size as well?
Yes, so the same rules would apply as with the whole 50 being the threshold. So M1 really kind of comes into play more with the 5,500 reporting. With ACA, it's a little more straightforward. It's that 50 person threshold.
Okay, great. Well, thank you. And thanks everyone for participating today. As I mentioned, we'll be sending out copies of this recording along with some handouts and information for you. That concludes our meeting. Thank you again for participating.